The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon and welcome to this resource webinar in the lead up to our event in Amsterdam starting on 2nd of October. My name is Guy Brindley and I am a content coordinator for the resource platform. The resource platform was set up in 2017 by the World Business Council for Sustainable Development, RE100, Solar Power Europe and Wind Europe, and together with our partners, our goal is to promote corporate renewable energy sourcing in Europe. One way we aim to do this is by raising awareness and educating stakeholders, and to this end, we have created the Corporate Buyers Toolkit. So my colleague Merce will give an overview of the Buyers Toolkit, and to give more detail on two aspects of it, we have Jan Huisman from the European Federation of Energy Traders to talk about a new template PPA, and Luca Pedretti from Pexapark, who will give an overview of their training academies. But first I will provide a brief update on the European PPA market. A bit of housekeeping. If you'd like to ask any questions, you should be able to see a box which will look a little bit like this, although you should actually have a drop down for questions underneath the chat drop down, and you can type your questions there and send them to us, and we will try, if we have time, to answer as many as we can at the end of this webinar. So this is what the PPA market looks like. This chart gives you the capacity contracted in megawatts, and I've split it out between wind, solar, biomass, and there's one wind and solar PPA here. On first viewing, this looks like a disappointing year so far for 2019, and it looks like we'd need some seriously large PPAs signed in the last quarter to keep on that trend of increasing capacity signed. But you only need to look a little more closely at the underlying data to find that actually the picture is far more promising than it appears at a first glance. This chart gives the annual PPA signed each year by number. As you can see, apart from 2017, we've seen an increasing trend from just 2 signed in 2013 to a record so far this year of 19 PPAs signed. And you should also be able to see from the increasing numbers of colours that this is happening in more and more countries, and I'll get back to that a bit later. So why does the capacity look low in 2019 when we've seen more PPAs signed? Well, this chart gives you the years on the left and the countries in which PPAs have been signed along the horizontal axis. And the size of these bubbles represent the amount of capacity contracted. And you can see that in 2017 and 18, there are many large PPAs. Here we have the Pexapark solar PPA of 391 megawatts. We had 2 Alcoa PPAs signed and a Norsk Hydro, and these really distorted the capacity figures. If you look at the 2019 row, you'll see that there's many PPAs, but they're all smaller in capacity. And this is why the capacity is looking smaller for 2019. But how are these PPAs located geographically? This chart shows that there is a big concentration of these heavy industry and ICT PPAs in Norway and Sweden. And you can also see in Spain that this is the Pexapark PPA, which I described in the last chart. But the European market has been developing in recent years, with PPAs being signed in more and more countries. So in 2013, we had UK, Sweden and Netherlands in which PPAs had been signed. And steadily over the years, we've had Norway, Finland, Ireland and Belgium in 2016, all signed PPAs. In 2018, we saw the first PPAs being signed in Denmark, Germany, Poland and Spain. And this year we've seen the first PPAs in Italy and France. And we also see this diversity in terms of the industrial sector. You have to bear with me a little bit with these graphics because it's not as easy as the flags, but we have ICT, heavy industry and retail had all signed PPAs in 2013. In 2015, we saw the first PPAs in transport and banking. 2016 saw the first and the only, as far as I'm aware, consortium PPA. This was signed by DSM, AkzoNobel, Google and Philips, and they all contracted wind power in the Netherlands. In 2018, we saw 4 more sectors: the pharmaceutical, logistics, automotive, and that final symbol is meant to be consumer goods. And finally, this year, we've seen the first PPA in the water industry. So, in conclusion, we see increasing numbers of PPAs signed each year and an increasing number of countries. In this chart, you can see 2019 is seeing additional growth, and particularly in 2018, you see more and more colours, and that's showing you the increased diversity in the countries signing PPAs. And I can show you the same chart in terms of sectors, and you'll see a similar trend where more and more sectors are getting involved in the PPA market. So it looked initially a bit negative, but actually we can take some very positive messages about the growth and development of the European PPA market. I'm now going to pass over to my colleague Merce, who's going to give us an overview of the corporate buyers toolkit.
Thanks, Guy. The resource platform recognizes the complexity for corporates to source their operations with renewable electricity, and it can be even more daunting for corporates that are new to this market. So for this reason, we have created the European Corporate Sourcing Buyers Toolkit to raise awareness and educate the stakeholders on the advantages of corporate sourcing of renewable electricity, and also to help corporates to navigate the market with increased confidence. So for this reason, we have put together this toolkit, and the first component is the introduction of the Corporate Sourcing of Renewable Electricity report. This report is an introduction to the different strategies that a corporate can follow to procure renewable electricity in Europe. The strategies are presented as business models and are divided into 2 main categories according to their geographical location. So one is for on-site models and the other are the off-site models. So for instance, as on-site models, we have the self-owned on-site. Also, we have the leasing, the on-site power purchase agreement, and the private wire PPA. And for off-site, we have divided them into 2, which are the physical PPA and the financial PPA. The report also covers 6 less commonly used variations of off-site models and 2 top-up models. So for each model, we describe the key features, which includes, for instance, the relationship with the guarantees of origin, information on the financial and greenhouse gas accounting, and whether they provide additionality. We also provide an overview of the European countries in which the model is available or has been carried out. And we expect these to evolve over time as corporates sourcing of renewable energy gains traction. The main models are complemented with real-world examples to illustrate how they have been applied in various markets, together with details such as ownership, installed power capacity, and location. As part of the Clean Energy for All Europeans package, Member States are required to identify and remove the barriers to PPAs as part of their national energy and climate plans. So for this reason, we have developed the European Corporate Sourcing Directory, which points out in which countries we have seen the various corporate sourcing models being used. So this directory also outlines, when the information is available, of course, which models are administratively possible in each country. The next component that we have put together is the European Federation of the Energy Traders template, which is a template contract for new entrant corporates. And it has been translated into several European languages, and Jan Heitzman will discuss the contract in more detail later in the webinar. Another component is the Financial Risk Mitigation Products for Corporate PPAs report that is written by the providers of the products that are available to corporates considering entering into a PPA contracts. The report describes the possible risks associated with renewable PPA and also the ways to mitigate the risks. The report will also be evolving over time as more providers contribute. Last, we have the PPA training courses across Europe on how to value and compare corporate PPAs, provided by our partner Pexapark. So Luca Pedretti from Pexapark will also discuss the training courses in more detail later in the webinar. Our next speaker, Jan Heitzman, is the chairman of the legal committee of the European Federation of Energy Traders and will discuss the contract.
Thank you very much. It's a pleasure for me to be here to run you through the contract which we have drafted over a period of 3 years. The contract which we have drafted is not based on just EFET input or EFET membership input. It is based on a much wider circle, including resource members. So we reached out to resource partners and member companies, and we also reached out most notably to financial institutions that confirmed the bankability of the agreement and particular clauses therein. Now, looking at what I wanted to show you today are the main reasons why we did this. We are obviously a standardizing association. We have done so. You can go to the next slide. You've done so in various forms and for various products, notably for electricity, physical electricity, but also physical gas deliveries. We have done it for EECs, meaning the GEOs, which are covered by the EEC system. And we have also created a standard documentation for particular products and particular markets that all back into one contract, being either a master netting agreement or master trading agreement. Why CPPA? Because EFET has changed its mission. EFET's mission is also to enable decarbonized markets. And through enabling decarbonized markets is one of the key cornerstones of standardization. And we felt that this is a part we could cover because of our long-standing experience in creating contracts that work throughout the EU 27. So the European policy is leading to a more sustainable energy mix and to a more decentralized generation. And obviously, the traded market or the wholesale market meets the CPPA market increasingly so. We have heard previously on the increased uptake of these agreements in various countries. And once the feed-in tariff in Germany will run out, there will be also more projects and CPPA use in this area. Now, going down one slide, the interest, obviously, why would this be done? Why is it important? At the end of the day, for buyers, it really is a tool to cover their business in Europe, meaning wherever the emissions, wherever the production is based. For sellers, it helps portfolio hedging, it helps investment. Cross-border for us is key because the multinational buyers and sellers require an international solution similar to the multinational traders that are trading not in one particular country where they may be even incumbent, but they are trading throughout the European Union. And why standardize? Simply because of the fact that a couple of risks that are not only typical to PPAs, but they're also typical for trading contracts. And we have developed a standard solution that have worked over the last 20 years, and we want to bring these standard solutions also to the new markets that are currently being created. We create physical and legal security, a safe haven, so to say, if the contracts are properly updated and backed up by legal opinions, which we procure regularly. You can go down. So what I said to you earlier is that we have this time not just brought input together from EFET companies, but we have heavily so reached out to Resource and also the supporting organizations from Resource. There was quite some input that came through Resource in the drafting process, which we have fully reflected on. And the result is then the standard PPA. Next slide. It was approved at the legal committee meeting in June, so it's a very recent agreement. And what we are currently doing is to work on that approval, also work on translations. It is developed back-to-back with standard EFET contracts for power transactions, meaning back-to-back in the sense that this is an agreement which is for single use, so it's meant to be there for a single project, whereas EFET master contracts typically cover a multitude of transactions. But in a PPA context, this is not possible, and this is why we have worked out with a single-use agreement that specifically cater for the specifics of the particular PPA scenario that there is. However, what we kept terminology, we kept structure of the agreement. So for those of you who have seen EFET master agreement before, they will immediately see that its structure terminology is similar, which is simply using the good parts which we could bring in order to build a new car, so to say. Next slide. Key risk factors are in a PPA sort of partly triggered by the long period of the project. These are projects that are running for several years now. Obviously, when it comes to the price, for example, the forecasting does not allow firm data to be available beyond a certain moment in time in the future. So we have forecasted, we can work with forecasts, for example, for 2 years, but not with forecasts, for example, for 10 years. So in reality, price is a risk factor for the parties that are involved in a PPA transactions. And we have in the contract provided for various options how to cater for it. We have seen the optionality is there to have, let's say, a fixed price. The optionality is there for have a price that lasts for a certain period of time, say 2 years. We have optionality foreseen that certain reference prices are simply ticked up and provide for a linkage of the price reference to the price to be paid under contract. So there is various forms of solutions that are suggested by the contract in order to catch the price risk. The similar risk is liquidity. Obviously, liquidity in wholesale markets may be changing. This is part of any market, that liquidity is there or not there. Same liquidity is addressed in the agreement, same as imbalance risk. So who actually has the imbalance risk? Is it the one that is generating the renewable electricity, or is it the off-taker? And how far can the off-taker take the balance risk? So these are optionalities provided in the contract, which should allow the contractual parties to take the right decision which fits to their project. The same goes for replacement calculations, replacement of powers, for example, that hasn't been delivered due to force majeure scenarios, due to late commissioning, due to technical factors, and so on. We have here foreseen various underlyings for the replacement calculation. The default one is the mark-to-market calculation, but we have also provided for other options should parties not wish to refer to mark-to-market, but to other ways of calculation of such replacement for power not delivered. An important point is the change of the subsidy regulation. Here we have a regulatory volatility that is there, that is incumbent to the system, inherent to the system. The change of power subsidies, we've seen it in the UK, where a credit regime was more or less made disappear within a very short time, whereas contracts were running for a longer time. So we are trying to address these potential volatility in regulation in the agreement as well by offering options. And the same goes obviously for things like volume risk. You can go down. If you look to the next slide, we see that the CPPA is possible as a physical arrangement or as a virtual arrangement. The difference obviously is that physical power actually flows in a physical structure, whereas the virtual structure is more focused on certificates which go with the power, which maybe then even lead to a trilateral relationship between a renewable energy regulator, a supplier, and a corporate buyer. Next slide. The credit protection in the CPPA has left the EFET master clauses intact. Why have we done this really? Because we wanted to have the contracts back to back for those companies that have EFET master agreement in place. EFET master arrangements are enabling close-out netting, they're enabling investor protection. This has been recognized in multiple European countries. So by linking the credit clauses through here to the PPPA, we give companies the opportunity to include the single CPPA into their netting arrangements, and therefore also benefit from the protection which is given as normal in a closeout scenario. And here we are thinking in particular of insolvency scenarios. This is where one of the parties just simply goes bankrupt, and the EFET agreements could therefore be fully benefiting from a preferential treatment where this is recognized, obviously, with knowing that the insolvency laws of any particular state override typically the contractual clauses. So the background is that you in reality have to check with whom you're dealing, or better said, in what country the counterparty is located with whom you're dealing, in order to make an assessment in how far preferential treatment would be granted to you in a closeout netting scenario. But by let's say creating a construction where we could pull in the CPPA either under a power master or under a master netting agreement, we enable customer and credit protection in many countries in Europe. Next slide. So how is the architecture of this? This basically is just two screenshots. There is two parts. There is the part one, which are elective provisions, and then there are part two, which are the main body of the provisions. The main body are in reality consisting of definitions, of explanations of the terms used in the election sheet. And they provide also for a base document, which could be then tailored according to the needs of the project. And this is done through part one. So in part one, there is a multitude of elections that fit, or at least it should enable users to use that template for the situation they want to use it for. So in the very beginning, there is already, let's say, the option whether this is for a financially settled PPA or a physically settled PPA. So depending on these sort of base options, you then have other options that then are underlying, and depending on the first decision you have made, what contract you actually want to conclude with your business partner. And looking at the elections which are there, again here there is a number of elections which you would not find in an EFET contract. So there are a number of elections which we simply don't need, but they are needed in a PPA context. Talking here, for example, of metering, of let's say construction of the renewable generation unit, etc. So all of that is catered for in an EFET agreement. You obviously wouldn't find that. But what we have kept are, for example, the credit clauses, because we saw that these credit clauses have worked very well in multiple insolvencies across Europe. So they have been tested, and I think this is important for users that they can rely on those and know that they have been tested. We are procuring in EFET also netting opinions which are available for sale, so you can look in reality in how far the netting provisions of the EFET actually prevail in a particular country or not. Next slide. Here we are looking at some of the clauses. I don't think it would be good to go into details here now, but it could be maybe subject of a separate let's call it mini conference or workshop where we spend a couple of hours with this rather than just 20 minutes. But you see here that, let's say, things like construction and commissioning, forecasting and outages, the delivery obligations, delivery measurement, transition, credit clauses, they're all taken up. You can go one slide down. We have also language for a certificate transfer, for financial settlement, for change in law. That's one of the clauses that was hardly was discussed a very long time because of the volatility of some of the schemes. There is calculation of the termination amount. We already mentioned it earlier, and there is also limitation of liability depending on the law that applies. And EFET documentation runs either under English law or German law as a default. The way forward for us here, what needs to be or what remains to be done is an important job. We are currently finalizing translations that have been instructed for Italian, Polish, and Spanish. These will be the first three translations. How does that work? We will create, in reality, dual language documents so that users that are, for example, both Italian don't need to conclude an agreement in English amongst each other, but they can also use simply the Italian version of it. And these agreements, these translations, will be delivered this month and will be reviewed until the month of November. So we give us, let's say, roughly 6 weeks to look through this. How does that work? We will circulate those with native speakers, and their role will be then to look in how far the law firms that have produced this have done a good job. Obviously, with translations, it's always a risk. There is the risk of bad translation. So there is the possibility to stick to English as a default language. So should any sort of problem arise, we regularly provide for English as a default language as an option for the parties should they want to, in case of any conflict that results from this agreement. Then what's going on as well, what we started is the legal reviews of the GEOs in general and the CPPA in a MiFID context. I don't know in how far you are familiar with MiFID, but MiFID is a central regulation that looks into financial services and that regulates those. And there is obviously questions on financially settled CPPAs and how far they are actually within the scope of MiFID. We have started this discussion, and obviously the result thereof will be shared. We may be even setting up a common working group with a resource that looks at, let's say, the regulatory qualification of GEOs in general. Other people are working on it. Rex, for example, is also currently undertaking analysis, and I've seen also yesterday a document flying around from NSOE. So they also look at, let's say, GEOs, how we can standardize them cross-border, because this has been so far one of the major issues, how to provide Europe with a cross-border GEO certificate system that is recognized in the EU throughout, rather than in particular member states. And what we will also do, we're looking a little bit, this is currently also ongoing, this is the bullet to the left here. We are screening the national laws and subsidy systems that are different in various member states. This is this fragmentation we are dealing with. So here we will provide with guidance notes that will equally be published, which then at least pick up these market practices and which will be made available to the user. So obviously, if you are thinking of doing a PPA in Italy, it may be different from doing a PPA, let's say, in Spain. This will be picked up by these guidance notes by suggesting additional language, but also suggesting deletions from the template where the regulatory practice or regulatory scheme is different and would not work with the contract wording as provided. So this is what will be done, and here the delivery is foreseen for the end of November. So after that, we will probably have a review for another 4 weeks, where we are actually then confident to publish those actually in the new year. So they are then really downloadable to all. So they would also further facilitate the use of these agreements. This for us is not new. We have done country appendices for certain products, not only in the gas sector. There is a lot of different rules when it comes to settlement, when it comes to scheduling, when it comes to specific market rules. We have always catered in EFET by producing a number of appendices which can then be used in order to cater for these products. And I think this has worked very well because it gives people still the possibility to relatively quickly grasp what the differences are in various countries. And we are doing here the same in the sense that we are providing for guidance notes, so no appendices. Here there will be guidance notes, there will be like recommendations for users to use certain clauses or certain text for a particular reason. And why is that so? Is simply because of the fact that at the end of the day, it should be the user itself or himself that decides what advice needs to be followed or will be followed in the concrete situation. So what is really done needs to be done is, let's say, educating the users about these agreements, making them understand that this is something they can use in France, they can use in Spain, they can use everywhere. And that should then also bring down basis risk in a larger portfolio. And looking at the uptake of CPPAs, you can see that companies will add, having larger portfolios, they will have an interest to get credit protection, and that's why I think this is a contribution that adds value to liquidity in this market. So this is all from me for now. Thank you for your time, and obviously I'm open to your questions.
Perfect. Thank you very much, Jan, for the description of the EFET contract. And now Luca Pedretti, co-founder and CEO of Pexapark, will introduce the training courses.
Yeah, perfect. Thanks for the opportunity. Please, next slide. We're going to host, together with Resource, a corporate PPA Academy. It will be one day before the Resource event, so on the 1st of October as well in Amsterdam. And I just want to give you some excerpts from the PPA Academy, which we're going to do, talking about the points and giving you here a little insight in what we're going to cover at the Academy. So we will talk about PPA trends. We're going to talk about the view from the corporate on the PPA, because the industry is still very much a sell side, coming from the investor side, from the sellers. And then also what Jan just explained on the EFET, we make real use cases. There are in numerous structures of PPA, and how could they be fit into the EFET standard, making best use of such a document. We will make real use cases. Next slide. Yeah, these are the guys who will be presenting. The first one is me, but also my partner, Michael, who is founded with me Pexapark, and Jens, who is heading our PPA practice and has been involved on probably 40 or more PPAs across Europe. So they have quite some transaction experience and will share their insights. Next slide. And again, next slide, please. Well, that's just a short overview. People love to talk prices, and of course, it is important. We show trends on PPA prices, and basically we derive it from the utility PPA market. Here is a little screenshot of what prices were for certain 10-year standard contracts for various structures, let's say the most popular structures in those respective markets. And in the PPA Academy, we will go a little bit deeper, seeing what is driving the PPA prices, the market, the structure, credit, liquidity, and how this relates also to corporate PPA off-taking. In the end, 80%, 90% of the PPA market is still utility driven, so they are setting the price. So this has an indirect effect on corporate sourcing, as their sourcing, their tendering will somehow be related to the overall PPA prices. If you're interested to get a monthly update on such price levels, you might subscribe. It's for free. Once a month, we update on the key markets. We'll be adding more markets over time, just adding Great Britain and Finland, as those are new markets of interest. Next slide. Another thing we talk is, of course, the utility side. Who is doing what? I think one of the key trends is the internationalization of the PPA market. We have seen, I mean, I've been more than 10 years in the industry. We've seen waves of utilities and traders expanding and retreating their market offering. And right now we're definitely again in expansion mode. We're having international utilities with strong credit rating entering new markets, be it Italy or Spain, being Poland, being in Scandinavia, offering PPAs. Now, the interesting thing, and this will be a big topic at the PPA Academy, when you look at the overall total demand for long-term PPAs, maybe this is maybe just 7, 8, 9 gigawatts a year. Now, if you keep this in perspective with the total new build, it's actually quite a low number. And we're going to talk about what that means for investors and also for corporates. Next slide, please. Yeah, and here it comes. I mean, where will future PPAs come from? Where will be, who will be the demand driver? And you can do this picture with various countries. We had a look in detail in Italy, for example, but also in Germany as one of the larger markets. And typically what you see is that the long-term PPA demand, of course, we would expect coming out of the total industrial demand. But when you split up the total industrial demand, only a fraction of it actually has a predisposition for long-term PPAs. And we will talk at length why this is the case and who actually is suitable for long-term PPA, because the industrial procurement logic is very different compared to a utility in procurement logic or trading logic. You have to take into account the cost of electricity against the cost of goods sold. You have a timing risk. Typically, a corporate procurement manager wants to spread timing risks, and all those factors we're going to look at. And of course, we're going to talk about future growth, as typically we see industrial demand rather sluggish, growing with overall GDP, if you look at the big picture. But then we have the new kids on the block. When you see where big new demand is coming, it's definitely from the tech companies. It's growing rapidly. It's very hard to get good data on it, but definitely something is happening here. There are some deals in the pipeline which are not yet released. Typically it takes half a year until the news is out, but interesting things are happening right now in Europe, in Finland, in Spain, and in other countries. Next slide, please. Yeah, let's look a little bit at the corporate side. We have been involved on way too many PPAs, so it's always good to do a PPA Academy and reflect. And typically what we have found being one of the major hurdles towards deals being credit risk and the preparation of new entries on the procurement strategy and timing risk. So there's a different logic applied by corporate users in relation to their procurement strategy, sustainability strategy, and it's more complex than a utility PPA, or it's a different approach. And basically we have seen a lot of misunderstandings also coming from the sellers, and there has been a great development in sense of all players becoming, let's say, more knowledgeable, and I think that's a key thing if you want to take out barriers. Also having more transparency on what is the fair value price of a PPA. So we're seeing systematically obstacles being removed to do and enable PPAs, but there's still some way to go. Now, if we move one slide ahead. Yeah, so what do we see? That's the Pexapark view as three key challenges on the corporate procurement. And this also we're gonna focus in detail at this PPA Academy in Amsterdam. One thing is the timing risk, which I already mentioned. Now, from a procurement logic of an industrial, you want to have more or less the average price. If you don't have a particular strong view where energy prices will be, a safe bet, a rational strategy is to not buy all the energy at one point in time. So if you look at this price chart, this is the development of the product Cal 20 in Germany over 12 months. And boy, if you buy at the wrong time, you can be severely off and the CFO is not going to be happy. And if you can believe that you cannot predict energy prices, what a rational procurement manager will do, he will buy in clips. And now look at the corporate PPA in comparison to this behavior. Here you want to talk about a 10-year large transaction. And if this 10-year large transaction takes up 10, 20, 30, 50% of your overall consumption, you might place the wrong, you click the price maybe at the wrong time. And this relates to the competitive product pricing. If you're in an industry with very high electricity costs compared to the cost of your goods sold, you're very sensitive to that. So if you buy at a different time at higher prices than your competing your competitor, you might have a problem. And on the other extreme is, of course, if your total energy costs in procurement are marginal, negligible, maybe just 1%, on the other side, this can be very beneficial for a long-term PPA, as it is not of a big risk if you buy high or low, because the cost is so much smaller. A little example, Google has revenues of well above $100 billion a year, and they have maybe 8 or 10 terawatt hours of green electricity needs. And if you assume that this comes at the price of 40 euro, they spent maybe 400 million euro a year on electricity. So if they buy a few euros higher, they will not have a big problem. But a chemical producer, an aluminium producer, they will have a major problem if they buy 2-3 euros above the market or above the competition. And the last point, which we're going to cover, you need to have a certain setup ready. You need to have, you need to understand the physical flow. You need to understand the cash flows. You need to understand profile risks. You need to have a team ready. You need to be able to convince the CFO, the CEO, how those things run if it hasn't been done. So there needs to be some knowledge in the company. Next slide, please. And one of the key things is PPAs are about risk allocation. It's about who is taking which risks. And we're going to cover this extensively. It's summarized nicely in one chart, and each of those factors and cost and risk components we're going to look at, because depending on the PPA you might want to enter, some of those risks are either with the seller or with the buyer. And the question is, what is the value of each risk and cost? Is it priced fairly? And how can it be shifted around? And the better you understand how this is set up, what drives this, the better and more successful you will be in negotiating a PPA. Next slide, please. Yeah, as mentioned, EFET, I'm a big fan of it. I've seen every PPA from every utility, and I've seen quite a lot of corporate PPAs. And I'm a big fan of standardization of contracts, and EFET has done a nice job. Basically, I believe it takes three things for a great PPA. First of all, clear commercial structure. Second, if you click exactly, you need to have a good understanding of the credit structure and the closeout mechanism if it comes to a termination. And thirdly, you need to have a good understanding of regulatory change. You're engaging here in 10-year contracts. Definitely over 10 years, some things can happen. And what we were going to do during the PP Academy, you see on the next slide, we're going to take dozens, or we're going to pick structures from dozens of possible or most frequent PPA structures, looking at how risks are allocated between buyers and seller, and then just do the practical exercise. How would you amend the EFET template to make those structures fit? So we hope to cover those three topics at the PP Academy. Next slide, please. Exactly. That's what we do in Amsterdam, but that's also, if you cannot come to Amsterdam, we have every month, we have PP Academy somewhere in Europe. Just sign up and hope to see you in Amsterdam or in any other location where we have PP Academies. Thanks for your interest. Thanks for your time.
Perfect. Thank you very much, Luca. So now we are going to go to the turn of questions. So we have received already some questions here. And the first one goes to Guy. And is, how can we get access to the European Corporate Sourcing Directory?
Thanks, Mercy. So the European Buyers Toolkit will come online on the second day of our event in Amsterdam. So that will come online on the 3rd of October. And it will be free for everyone to access. You'll just have to go to our webpage and it should be easily found under the Buyers Toolkit. It will be one of the bits there. So everyone should be able to get it for free from the 3rd of October.
Thank you very much, Guy. So the next question goes to Jan Heitzman. So Jan, could you please name the financial institutions who confirm the bankability based on the new EFET contract?
Out of my head, there was Banca Intesa in Italy. There was the Nordea Bank. There were people from Macquarie. I would need to look that up, but we had relationships and discussions with about 5 or 7 banks, including the ones I just mentioned. Hello?
Perfect. Yeah, thank you very much. So we actually have another question for you. And is, can the EFET template also be used for a direct PPA where there is no utility and supplier involved?
That will be a PPA just for the certificates? If this is meant, then yes, you have in the contract in itself, you have, as I said earlier, a number of options which are, so to say, excluding sub-options. So you can go, for example, just a physical settlement of electricity is one option, or you go for a financial settlement of electricity is another option. And then depending on this base option, which is in paragraph 1, you have then subsections that apply or don't apply to that base option. So yes, the PPA can be used for a direct certificate transaction.
Perfect, thank you very much. So we actually don't have more questions. And of course, we will be sharing the presentations of the slides.
Thanks, Mercy. And yes, to wrap up now, because we're getting to the end, I'd like to say thank you to our speakers today. And I want to make you aware of, we've mentioned it a couple of times, but our event is happening in a couple of weeks' time in Amsterdam. It's a really great event with lots of stakeholders from the industry there to meet and greet, and sessions on all the things you can see here on the slide. I would say that if you're interested, to sign up soon, because tickets are selling out very quickly. Finally, if you did have any questions and you wanted to get in touch, you can contact us at info@resource-platform.eu. But apart from that, I'd like to say thank you very much for attending and have a nice afternoon. Hopefully see you in Amsterdam. Goodbye for now.
Thank you.